Hello everyone, this is Juan Sarmiento and today is Friday, November the 12th. And so we have a lot of profits so far. The markets keep on going up, which is good for this kind of trading or investing, if you will. As the markets keep on making new highs, well, we keep making money. The question is it wise to keep on buying when it's already so high? Well, I don't know. You tell me. I could have sold a long time ago, and it just, how about if we saw this as a top here? Look at all that you have missed. You never know. You never know what the markets will do. People will claim that they know, but in the end, the markets will do what the markets want to do, and that's it. Okay, so this is my motivation by doing this is to show you that there is a simple way to invest in the stock market without much in the way of commission, and that you're well represented with the SPY. You're well represented. The market, it includes 500 companies, the biggest 500 companies of the US markets. And so even if you don't know much about this, you keep on buying the one share whenever you have enough capital in the account. So it's very flexible. You decide how much we want to put, and then whenever you have enough to buy a share, then you do so. In this case, we've been buying and putting new money, and now we have this cash, $477 here, doing nothing. And when you see the price of the SPY, well, it's below that. So we are going to buy a new share without entering new money. At least that would be if this was real. This is a paper trading account just for demonstration purposes. What I would do if I wanted to invest in the stock market for the first time in my life, that's probably a good idea. And when we go to, in this account, let's go to the monitor tab and account statement. And here you would have your current position and all the trades we have made. You can see by the dates, it's like 1 week apart. Okay, so 300 days. So we started back in on the 1st of April. So it's not even a year yet, not even close to a year. And we have accumulated $1,000 in profits. And we have invested so far $14,481 and close to $14,000 because this is cash. $477 is what you have in cash, which we're going to use to create a new trade. The easiest way is to copy what we have done before. So I'm going to click here, right click and say Analyze Trade. Okay, so that is a pretend trade. Okay, here you see my graph. It shows you what happens when the stock market goes up, how much money I would make if, say, the stock went to 490. This particular stock, I would be making how much? This pink number here. Which is at 490, I will be making 1,600, 1,700. Okay, you can reset here. Let's reset that, and this shows me here is the current price and how much money I'm making and how much I'm making today with the little move up, $86. Okay, so let's enter a new trade, but this time I need to open this signal here is a lock. It means it is set at the price that I decided to trade before. So let's unlock it, and it gives me this. It is the current price. You can see it here at this top. That's the current price. The bid and ask is very close to either. And so I'm going to do it at the market, so it fills right away at whatever the price happens to be. Let's put 72. I lock it, and now I'm going to enter this trade sometime, if not immediately, so sometime during the trading day is very likely to fill. I'm only buying one share. I already have 30 that I have been accumulating. So let's confirm and send. Okay. You can see that I have paying no commissions. I'm paying no commissions on this kind of a trade. So that means you're not paying anything other than the investment. And there it is. It got filled at 7.72, 466.72. And here you have the 31 shares. That's what we have so far. At some point, if you got to 100, you can sell calls against it. But that's a different thing. You can see here, if you sell a call, one call represents 100 shares. So that would not be allowed, because then you would be too much of a short. But now this is what it would look like, the risk graph. And so that means if the stock goes higher, you start losing too much money too quickly. So it doesn't allow you to do that unless you had 100 SPY shares. Okay, so, but it's a long time before that happens. For the time being, we're just gonna keep on doing this and see how that goes. So far, it's doing fantastically well. Consider this. Assume that this money, we have had it for a year, which we haven't, you know, but just assume for argument's sake. And how much of a percentage would we have had? I'm sorry for that. Let's do this again. Okay, let's say, okay, we have in profits $975.81. That's this number here since the opening, okay? We haven't, none of these positions have lasted, none of these shares have been there for a year. Most of them have been only a couple of weeks, 3 weeks, 4 weeks, whatever. Only the oldest of my trades was in April. So it's not really fair that this is a yearly return, but I wanted just to show you. So I take this number and I divide it by my investment, which is right now is 14,000. And that in a percentage is almost 7%, okay? That is the return, almost 7%. If it was 14, I would be delighted, okay? 14% return. But this is, we're talking about the long term is our interest here, right? So keep that in mind and just see this as a simple, elegant way to trade, to invest in the stock market without much hassle, and you having control of how much you want to put in there, okay? That's all for today. Thank you very much for joining me, and I'll see you next time. Bye-bye.